Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Friday, December 1st, 2023. It is 3:07 p.m. Eastern Time, and this is video number 2. What I wanted to do is two things here, just a very brief update and a follow-up to some of the things I covered towards the beginning of today's earlier video. And that would be the bounce target on range on the euro, which we just hit. But also couple other things again that follow up to that earlier video. Some of the things I highlighted with the PPO crossovers, the bearish crossovers there. It'll be relatively brief. We're going to look at the Mag 7 and QQQ, and then follow up with the remaining questions since that last post. Remember, I went back 2 days ago because there was a ton of comments and questions under one post, so I'll catch up to everything else today. And if I don't say it towards the end of the video, if I miss something that you posted before that or whenever, if you have a question, comment, that's what I'm here for. Post it, and I'll try to get back to you as soon as possible on that. Okay, so here's the euro US dollar pair. Again, pretty much just the dollar in reverse. Has a very, very high positive correlation to the market. I've covered many times. If you're not aware of that or haven't seen it, you can simply overlay. If you're going to use SPY or QQQ, then you want to use FXE because that's the direct Euro ETN, and it's going to trade the same hours. Remember, I use this chart because it's trading around the clock, and so you have a lot more candles. And the lines will follow. If you can overlay it, you're just going to see the index is flattening out overnight, from 4 p.m. to 9:30 when you do the overlays. Or you can also use UUP because it's the same difference. That's the upside down or inverse one-time non-leveraged dollar ETN. All right, so that's it. I figured, this is probably that's a very, very solid support level. They stepped in and bought it. And we did have the divergence. That gives me a little bit of pause. But again, I'm looking at that. We had a slightly lower low on the RSI. I don't want to nitpick. We'll call it positive divergence on both. We had a pretty impulsive bounce. And again, doesn't mean that we're going to stop here, but so far we did. Remember, my bounce target zone was anywhere from here, which is this resistance level, now about 108,912 former support, all the way up to that downtrend line. So that's that purple. I just made it a purple. I circle it in the video like that, but I added to this chart. So that's it. Where do we go from here? Well, I'd prefer to see this being short already and looking to add to shorts. But remember, today's Friday. I didn't do anything today. I haven't covered, I haven't added. I'm just kind of sitting tight, kind of in swing trading mode with mild positions. Sometimes I'll day trade, but I haven't been feeling so well lately, so I'm not sitting in front of the computer as much as I usually do this week. All right, that's it. So, we could certainly go up there more and past there. But, if we do get another leg up, another thrust up, anywhere in this range here is, I believe, an objective level 2. Again, depending on how you're positioned, if you agree with me, to add shorts. If you're a bull, you should have bought that, pull back to that level. You can wait for a breakout above the downtrend line. I'm talking about equities again. And you can trade the euro directly if you want to do this. I know some people do trade Forex. And if you do, here's E7, Euro futures. DX is the dollar futures. It's just going to be an upside down chart of this pretty much. There's your bearish rising wedge. The same thing. This is going to mirror that EUR-USD pair I just showed you there. There's the bearish rising wedge with the negative divergence. There's the breakdown. You had a little bit of price support there. So that was a breakdown point right there. Took us down. That's the first target. Little kickback rally bounce. That's that comparable target I gave you earlier today, and even earlier this week. Same level on EUR-USD. And there's the minimum bounce target. So there's that range again up to that downtrend line would be ideal. Anything much above, it doesn't end the bearish case. That's still the recent high on the euro. That's pretty big divergence. Is it possible that's all we get? Absolutely. It's just not an all-in short moment yet. If I believe that we get to that point and it happens before those, remember the purple lines from months ago, all the key support levels on the big Mag 7, that certainly, will be an all-in moment for me. But maybe we'll get something before then because we're pretty comfortably above those levels now. So what I'm doing here, that's just a measured target, widest part of a wedge added to where it breaks down. So who knows? Maybe that's it. Again, it's Friday. A little more than 45 minutes ago, so no reason to get crazy. And there's QQQ. It took out S1, but it regained it with the bounce in the euro. Again, that's why I do these long-winded videos and watching many things because although this was not any type of support that I could see on QQQ, they stepped in and bought the markets here. The algos, everything. It's all related. If buyers are flooding into treasury bonds or the dollar or the euro or other things that have a very strong correlation to the stock market, that's going to trigger the buy programs or sell programs in the S&P 500 and QQQ and in those top stocks they hold. So either way, that's it. Still marks a divergent high and still maintain these targets to be continued next week, pretty much. TLT, 60-minute chart. We're above T3 right now. There's a gap right there. See, that's the gap. So we pretty much now have backfilled that gap. You can look at ZB futures as well, but it's still, we're talking basis points. We're within T3, less than 1%. So we still very much have the divergences. And like I said earlier this week, I could certainly see the potential to carry up to my fourth target. I still maintain that fourth target. I thought we'd get a pullback before that. I still do. But if we don't, as far as, again, whether you're trading the treasury bonds or you're using this as a proxy to initiate or add to short or long positions on the stock market due to the strong correlation and that hypersensitivity I refer to between interest rates and the stock market now. Just to put in perspective, 93 is where we're at now, where that gap is, and to go up to T4 is only another 2% or so. That's a decent day, 2 decent days, or 1 really good day in TLT away. So, with the divergence, I wouldn't bet on it. The RR to me is abysmal, to try to eke out 2% more when we could be hard down. Kind of looking at this, let me roll into the next charts on QQQ. It just seems with everything kind of stretching and so many more and more sell signals. I've given you my low volume sell signal, which again is it's not an exact timing indicator, but it is a timing indicator. When I say that, let me clarify. Just like this PPO indicator that I told you about. Remember earlier we were down here. Let me turn off everything else. We were red, and as I said, it's a daily chart, and see this all the time. When you're trading on the daily time frame, all that matters is how you close the day, and that matters whether it's a candlestick you're looking at, let's say a bullish or bearish candlestick pattern or reversal, or you're looking at a break of support or resistance. That break of support or resistance has to stay in place by the close, and same thing with all these indicators. So like I said, we're back above because we did bounce. Euro hit support, bounced, which caused the stock market to bounce, or they both bounced together, however you want to say it, chicken and egg. So where I'm going with this here, let me show you my low volume indicator if you missed that. All right, so this was the low volume indicator. Again, this is since the bear market began back here, around early 2022. We're technically right there, a hair above on November for the Nasdaq. Everything else was right there in the first start of the year in 2022. It's just been a golden level. Again, an indicator I've used many years, and it's pretty damn effective, not great. And over time, my level changes. This is the magic number when the 10-day exponential moving average falls. So there's our one whipsaw right there, which came off the bottom. So nothing perfect, but yet 1, 2, 3, 4, 5 so far. What is that? 5 for 6. And if this one pans out, it'll be 6 for 7. We'll see. But again, it's fired, and as I talked about, it's not an exact timing. To me, because I try to get precise, as you guys know, I'm not like the folks on TV will come out and I'm bullish on Qualcomm, and I'm going to give it a price target of blah blah blah. But they don't tell you when it's going to get there. They have no time frame or anything like that. They're just based on fundamentals, valuation, all that. I try to get more precise, and the precision comes on timing entries and exits off the intraday charts typically, or daily charts. So these are, yes, a sell signal, but not like at that moment. You want to wait, and again, it's when you're trying to build a case, the more check marks you have, the more sell signals, particularly breaks of support or anything else that I see on the chart, on the price action, with candlesticks and trend lines and support level, that kind of hones in. So right now, like, we have it, and sometimes it happens almost immediately, the turn. You can see these horizontal lines. It happened here. We had already started to fall, nailed the top right there, nailed that top right there, that counter trend bounce. Here it came a little bit early, and there was the top there, pretty much nailed it. And so far, if it plays out, it nailed it now, because we're right there. We just haven't gone down yet. And if we go up, and we go up significantly, and we don't, let's say give it a window of, a couple weeks, 2-3 weeks, and we're much higher, then it didn't pan out. So anyways, that one fired. And then the one, back to what I was just talking about here, this one, as I mentioned also, is a, let me see if I have a board that I put the lines on. I don't think I did. Yeah, there, I did. No. What was that? I was marking, never mind, those are not the bullish and bearish crossovers. Those are not. I have lines. I have a lot of different boards. Sometimes I mark these up. Sometimes I just visually can see when they're happening and keep track. All right, I don't have it there. Let me turn off everything. But I've drawn it out for you before. This is, there's one right there. And you went down. There was one right there. And remember, this is a much bigger green hill, much more significant. There's one there, down. There's one right there, and it didn't go down. We did have a pretty big hill, and that one didn't pan out. But as I've showed you before, going back all the way to, back here, that one most certainly panned out. And a lot of them did. Again, it's not this one, the success rate is not like 80-90%, but it's pretty darn good. Anywho, and again, most importantly too, if you go back and scrub this, like, let's say that one, for example, or that was a whipsaw. We didn't have a big green hill. You have to have a big green hill. This is a big green hill. This is a big green hill. And then get the crossover, and you can see that the correction usually follows. But then you also want to look at other conditions. So you're coming off overbought conditions there, and so that was a drop here. You're coming off overbought conditions. You had overbought conditions there, and then you continue to diverge, and this is where you put all the lines back on. So you can see right here was our divergent high, and that was the high, and then we had a sell signal there. So again, it's taken in with a lot of other things, including but not limited to what we drilled down to for timing on the 60-minute time frame. So we had this divergence, and maybe we get another thrust up, and if we do, it'll very, 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 very much still be anytime soon. That is next week I'm talking about. Get another marginal new high. It's simply going to extend those divergences. And I know some of you, I get the snide comment, you keep talking about moving the divergence. I don't care. I've done this long enough. I'm almost semi-mechanical with it, and it's not going to play out all the time, but it plays out much more often than not when you have these multiple conditions. The divergence and overbought conditions are only one of them. Usually plays out for a trend reversal. So we'll see. That's where we're at. Now, back to the PPO crossover. Again, it's the histogram. I covered it earlier, so I'm not going to go in detail again. It's when you get a bearish crossover here, negative divergence, and it flipped because we bounced, and we'll see where we are at 4 p.m. today. If we dump hard into the close, it turns red. If not, it stays green, and then we'll, again, to be continued next week. Now, why? Well, first of all, I've already talked on previous videos why it appears imminent. Again, it doesn't take sometime expert chart analyst to see the trend where it's going. And again, guys, remember, it's not magic. These are momentum indicators. It shows the momentum is slowing, as my volume indicator shows that buyers are drying up. Market's going up. Everyone's afraid to short it. That's why it's not going down, but fewer and fewer are buying it, and that's what tops are usually made of. So now let me look at something else here for you. Let me park the other indicators. I'm kind of making a mess with these charts. Park them over here and just concentrate on the big fangs, or Mag 7 now. I'm sorry, I think I lost that name. All right, so here's Apple again, and you can replicate this on your own. Put up a PPO histogram. If you don't have a PPO, use a MACD. This was not the biggest green hill, and got a red cell. And I would stay away from these when you're trending and it's not distinct. But I'll tell you what, we only went up. Count the candles. That's less than 2 weeks. That's about 1, 2, 3, 4, 5, 6, 7 candlesticks, and that was the top right there. And the top did come, and then you can see again, it's a trend indicator. It shows when the PPO crosses over, it's in bearish territory, and you would have captured most of that correction. Then you got a bullish crossover right here. So get out of your shorts again by that one indicator. Get long, and it wasn't much. You didn't have a lot of time, but yeah, you made 5-6%. Again, you can see the it's been pretty damn reliable. And so here's the last one. Crossover bearish. Probably another 5+% drop. And this is just Apple. I'm just going over Apple. Some of the other stocks are more volatile. Apple has less volatility than many others, the Mag 7. But there it is. I just wanted to point out that we had that signal fired, and I'm just going to rifle through them, and you can do the same. So Apple fired on the daily chart a bearish PPO crossover, confirmed yesterday, and barring some type of explosion in the last half hour of trading to the upside, which we're not going to get, it's going to also solidify that sell signal today with an even deeper crossover. Again, it's not going down, but it stopped going up. All right, Microsoft. And yeah, it could be high-level consolidation. I talked about that earlier today. So, I always say this, guys. I can sit here for 2-3 hours and talk and make a bullish case. If you say, Randy, just sit there and talk about the bullish things, reasons to buy, I can do that. And I do. And I look at it. And at the end of the day, it's just like a tough, I always use that. I don't know why. I'm not a big legal buff, but the court, juries, have a tough case and they got to send somebody to the electric chair and they debate and they think about it. But ultimately, they got to weigh the evidence and say, is this guy guilty? Did he do it? Do I send him to the, prison for life or to the electric chair or not? And so, you got to do, there's rarely ever any clear, I'll tell you, in the stock market, there's never ever going to be a clear, super no-fail buy or sell signal. It's always complicated. So that's why we do what we do, or I do what I do, and that's why I talk sometimes an hour, on these videos. Okay, that's number one. That is the Apple was. This we're on Microsoft now. Microsoft fired Wednesday, yesterday, and even today. That is a sell signal. Let's see, the last time Microsoft told us, gave us one of those was right there. It wasn't much, but it was the trend. It was down, dropped 6%. That wasn't even a big hill. You can play the game and go to it right there as a crossover. Certainly, that was more than 5-6%. There's a big hill right there. So you can see, again, it just shows the trends and when the trends change, and it's pretty darn reliable. And again, taken in conjunction with the other technicals. That's how I use this one, not as a standalone. Folks can, and I'm sure there's 101 people out there, a lot more than that played around. I used years back, over a decade ago, I played around with those back testing programs and where you can plug in other words, plug in the SPY or QQQ or any stock and run it back 10, 15 years and go short every time you have a bearish crossover, sell your longs and go short and then buy here. What you get is there's really nowhere to filter it out, because in different market conditions, when you get in trending in trending markets, it works good. But in sideways consolidation periods, you get chopped to pieces on those. By the time it tells you to get out of your longs and sell, the correction's almost over. So I kind of, again, that's why, as I told you, I look for big hills, big red hills, inverted hills, or big green hills. And when you get these little ones, that's where you're going to get chopped into pieces. So because momentum's, we're in a consolidation period, low volatility, and the PPO is just kind of flattening out. All right. Okay, so 2 for 2, right? I'm going through the Mag 7. 2 for 2 fired this week and have given confirmation on that signal. Doesn't mean it can't reverse and be a whipsaw. I'm just telling you, there haven't been many. Look, it's been a trending market. You haven't been many whipsaws lately. Alphabet will fire today, barring any crazy reversal in the close. So that's 3 for 3. Amazon fired on, gave a bearish PPO crossover on Wednesday, and is histogram solidly red today. Nvidia fired on Tuesday and continues to, the PPO continues to move lower, below the signal line. And then 2 more. Meta fired on Wednesday. So what are we at now? 6 for 6 on the Mag 7. And then Tesla, the standout right here. Teslas are, whatever, say what it is. But Tesla recently, from a technical perspective, got rejected off this downtrend line. But again, take it for what it is. So 6 out of the 7 have made bearish PPO crossovers. Again, you can see very few whipsaws on these guys. Tesla will probably follow suit unless those other 6, it just proves to be a whipsaw. So that's that. I just wanted to cover that because it's just, like I said, a little bit of an add-on to what I covered before. Now to answer the questions. All right, so this is how far I went back today. There were 19 comments. So now let's pick up these remaining comments and I'll wrap things up for the week. All right, price targets for QQQ and NQ. Thanks. You have a look at wheat. Okay, as I mentioned in the video earlier today, I did that yesterday. Here's my 120-minute chart of wheat. Looking, oh yeah, 120 minutes, so 6-hour candles, and you can see what I have here. Let me just give you a live chart. Why don't we do that? Okay, so it's moved up a little bit more. Positive divergence here, divergent low. Pretty decent price support. So you had this trading range here. I'll box in for you. There was resistance up there at about 628 3/4, call it 629, down to about 569, and we broke out. We took out that minor downtrend line coming off a divergent low. So this whole thing right here, you had several key reactions here on the futures of wheat, and that we broke down, but then. As I often say, breakdowns that occur with positive divergence typically fail. So that is bullish. That's a whipsaw, bear trap, a false breakdown, whatever you want to call it. And so I don't have a lot of resistance. I don't see a lot stopping wheat. No, anything's possible. What I would do at this point, and I'll do now, is add a little uptrend line that might give a correction when it's taken out. But otherwise, I think we'll drift up here. And I'm going to get to the chart of wheat, W-E-A-T, the ETN, for those of you that like the ETNs better. But these are the next targets here. So let's roll into the ETN. A lot of these, or quite a few of the commodity ETNs were retired this year earlier. Yeah, let me fix my indicators here, put back the PPO and the RSI. All right, a little bit of a busy chart. And, you know, for quite a while, over the years, I have a great track record on wheat. Late this year, it's been just couldn't catch up. Now we had some, don't get me wrong, we had some good trades earlier in the year, and we shorted it, or I did, and posted that on the site, you know, on these rallies here. But since then, I've been pointing out divergent lows, and we just can't catch a bid. It just gets these divergent lows, keeps going lower and lower. But I'll tell you, these divergences are building, bigger and bigger. And so from a technical perspective, the only difference I see is the divergence is even larger now. This is a weekly chart. I don't know where my line went here, but you can see positive, aka bullish divergence on the weekly. There was on the weekly right there, a bullish crossover, and we got that big lift. Remember, we were long and strong that one. We got in early, then we shorted it, went up again on either the first or second pullback. But now we almost have the divergence confirmed. Let me put the histogram. Yeah, see, this means that the PPO just made a bullish crossover. So now it's effectively put in a lower low. So either way, I like wheat. Somebody asked about corn, so I'm just going to get to that one now. I've got these charts up in the same comment thread. This is corn. CORN is the symbol for the ETN. Big old bullish falling wedge. You know, I highlighted here. I thought that would probably, and we did. We bounced one time off that level. It's gone lower, but you can see it's like wheat. And by the way, they're going to move together. These are, I don't want to call them competing grains, but they are, you know, it's corn and wheat. You can make bread out, bread out of both of them. You can feed cattle, livestock. You can, if the price of one gets too high, people buy the other. So, anyways, that's set up nice on the weekly. Remember, we had a big divergent high here. I remain quite bullish on, I believe, we're in the very early stages. I believe I've stated it many times, that I believe this is the first leg up in a new bull market in commodities. And this was the first corrective wave, and I think prices are going a lot higher. I like these long term. I think, for diversification and asset allocation, and I like to strategically or tactically increase or decrease my position. So for long-term accounts, it's looking good here, and it'll look a lot better when we take out that bullish falling wedge, the top of that bullish falling wedge. There it is on the daily chart here. I know it's a little busy. I got a lot of stuff going on this board. I might have a different board here for corn. I'm trying to just show you the trend line. We had one false breakout there. That sent us back down. But you can see this corn is just holding this about 2180-ish level, really good. It keeps making ever so slightly lower lows while the divergence continues to build. So I guess at this point, I would watch this downtrend line right here. That gives you this wedge, and a pop above that could get it going. And I would view this, me personally, as a more of a position or trend trade, long-term trade at this point, or what I believe may be the bottom of the corrective wave in the first bull market, in a much larger bull market. And, treat it with, stops according to your targets. I don't have them right here right now. So I can't remember if in that somebody asked me about the corn futures, but there you have a potential downtrend line. There was coming off a divergent low, just like wheat. And again, wheat you had here. I think it was that was my 60-minute chart, 120-minute chart. Okay, already covered. Oh, very important too. I have said, I don't say these things every day, but going back at least a couple months, I told you my preference for a long time when I've been harping on, commodities as a long-term, most likely in a new bull market. Going back a few months ago, and several times since, I've highlighted my preference on DBA over a broad-based commodity ETF. Now, what I'm talking about, DBA is only has agricultural commodities. So everything I just covered, and I'm about to cover this. Somebody asked about live cattle. I haven't updated this in a couple years. You can go to their site, Invesco DBA, type, or just Google search holdings, Invesco agriculture ETF, cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, cotton. So this is great for the person that doesn't do this full time and doesn't want to try to be in the best, long, the most bullish commodities at any one time and maybe short the others. I often do that. This is a kind of a one size fits all, but what you're doing here, the problem with the other, potential problem with the other broad-based commodities like the ones I've highlighted many times in the past, you have, I think, there's GCC, broad-based commodity index, there's DBC and DBA. That's no, I'm just at DBA, I'm sorry. There's one more I often cover, and I'm looking at my commodity list, and was it DJP? Now the problem, again, maybe not a problem. It depends on your outlook at the time, but these guys are top heavy in energy. You can pull they do have everything I just covered as far as the ag commodities, but they also have all commodities, which are softs, hards, agriculture commodities. They have metals, industrial and precious, copper, gold, silver, and then oil and gas. So therefore, if the oil and gas sector is not doing well, and those are usually it's usually the top components of these broad-based commodity sector ETFs, just due to the indexes they track, like the UBS commodity index, it's 40%. So when oil's sucking wind, as it has been, these guys are going to suck wind. So again, just back to what I was saying. This is why a few months back I mentioned this one being, now it is wedging up here. So, but with that being said, I just showed you a pretty, what I think a pretty positive outlook for corn, wheat, and sometimes in a bull market, that's what you do. These things go up till the divergences are no longer there. Either way, it's you don't put all your eggs in one basket for anything. And ideally, tactically, you try to buy pullbacks to support, like a trend line or the 200-day moving averages, or price support, which right here is 21.35. Okay, LE, I dropped off. I haven't traded cattle in a while. Let me just load it up, and I'm sorry I didn't have a chart queued up. Let me just try to look at it for you. 6-month chart. Certainly has divergences. It's certainly in a downtrend as well. Divergences, again, I always say, are not a buy signal, but you've got some. If we make an equal or lower low, that's where you'll still have. So I could see a little more downside here. Let's just say we take and get rid of that one and extend these trend lines out. This is what often happens. If you can extend the lines out, then you get one more thrust down. Put in that extend the divergences, and then reverse. Trend line's not super clear, but could use that. And that's 6 months. What do we got when we look at on an hourly chart? Yeah, same thing. I mean, this is just zooming in. I was on a 120 minute. I just dropped down to a 60 minute. There's your divergence. So no buy signals. Best you can do is maybe a break above that trend line, or sometimes I'll just take a shot at a divergent low. I'll have to study it further, go out to daily charts and all that. Again, it's in a confirmed downtrend. And again, this is another reason why, you might want to go with a broad-based, and it's going to muddle your returns. What I mean by that is there's times wheat and corn are going up and then livestock's falling, cattle, hogs. But overall, you can see, as I showed you a minute ago, the trend in DBA has been bullish, and it has been outperforming the broad-based commodity arena. Okay, next up, that was wheat and everything. It kind of segued into the other things. NQ. Someone said it seems as if NQ would hit its first target well before QQQ. Yeah, sometimes when I do these charts, I don't spend a lot of time like making sure everything. I'll look at the chart, I'll put up my targets, and so I may have a support or resistance level, especially when it comes to NQ and QQQ. Because remember, as I said earlier, when talking about the euro US dollar forex pair versus FXE or UUP, for example, the dollar or the euro ETNs, the former trades 24/7. The latter only trade 9:30 to 4. So therefore, you're going to get more reactions, meaning pivots in NQ, the way I'm viewing it, the round-the-clock trades. And so therefore, I may come up with additional support levels that aren't really visible on QQQ, because that's showing you a security that's only trading from 9:30 to 4 p.m. So either way, you line them up, and I'll look at that. I haven't studied those charts any further. I'm trying to get through this video. I already gave you a long one today. Retweet. Okay. I don't, just so you know, I don't and never have been a big use social media much. Years ago, over a decade ago, after I started the site, I grabbed, a Twitter account with the right side of the chart just to an experiment sending things out. This is too much work. I'm not a big social media guy, so I'm not on. I have accounts for Twitter, Instagram, and whatever else there is, and LinkedIn. I don't use them at all. I never look at my LinkedIn account if you send me anything there. I never look at my Twitter feed. So I just want to say that Facebook. No, I don't go on there. I just have it to use Facebook Marketplace. All right, but let's look at this. So. Interesting. Okay, so this is a chart this subscriber said they sent to me, and it has a compilation of the Big Mag 7 here, and it shows this little consolidation area and a breakdown there. So that's interesting. Yeah, I'd love to see an updated chart. Either way, I just showed you that they look weak right now. They've all but one has made a bearish crossover, which I'll call it what it is. It's a sell signal. So I wish I had very solid sell signals on the price charts. I'm talking about when I go here and I look at Apple, what I have. You can make a case that maybe this is a bull flag here and that's a flagpole and we're going to do this. So it's another reason why you don't get married to any one bias. I told you where I think things are going because I don't like waffling around. And there are times I don't have a strong opinion. I am waffling. I just say, hey, I don't have any position. I don't have a horse in the race. So if that happens, you don't want to ride that out short. If something happens next week, which will probably be a big drop in bonds, rally in the euro, we could see Apple, that's your flagpole. There's your bull flag. I don't see it that way for the reasons I told you, but that could certainly happen. And you will not want to stay short QQQ or Apple if that does happen. So, anywho, let me go back to the site. So that's an interesting chart. Thanks for sharing, and keep us updated. And let's go back. And back to the comments. That was the chart we just looked at. Dow up 500 points. Okay, just commentary. What do you think about Dow Jones? I don't think much about it. The Dow Jones is 30 stocks. 30 stocks is not representative of the stock market or the economy, just like the Nasdaq 100. It's an index you can trade. I don't track it, so probably had a couple top components that were lifting it up. I would take a look at corn and cattle, which I just did earlier. Okay, what to do with our NVIDIA short? Let it run. I already covered natural gas earlier today, so yeah, let's look at NVIDIA. I don't know where it's running. I've been posted the semis as a short. We had it as a long earlier and closed that out early in November, I think, and been short. But NVIDIA, that one peaked at earnings. There was earnings right there. It's been falling since. Yeah, I don't know which way it's running. It's not running to the downside, but that's a pretty clear trend to the downside. These are levels, support levels. I got a confluence of faster moving averages just below it, and about 461-ish support. Not a super great support. I'm gonna tune that down a little in color, just because it's support, but it's mild support. 440 is a little bit better. And then remember my purple lines. If you're new to the site, this is what I've been talking about for many months, several months now at least. These are the levels, and there's an uptrend line as well. It's purple. I know this chart looks like a rainbow flag, but it's got colors all over it. But the purple colors are the levels that I said, if and when taken out, that's like my all-in moment short. And if I can see any reason to get aggressively short before then, I'll let you know. But that one's just really look at that, all those levels right there. Look what NVIDIA's done in this range. It's just been in this big sideways trading range. That reminds me a lot of the stock market. Many individual stocks that were topping out in a similar fashion back leading up to the highs and around the beginning of 2022. So again, it's to me just in the 200 days, everything. Remember, most of them, kind of recapping, sorry about that, but knowing there's always new folks, many of those stocks, and that's why I got bullish and long here, covered short, so they had hit the 200 days. QQQ hit the 200-day. Apple just undercut it, but hit the purple line there. Remember, Microsoft, like a champ, held those purple lines. Alphabet right there, boom, right on it in the 200. Yeah, that was a 10 on a 1 to 10 to get long. Shame on me for not staying long. I posted my little mea culpa after a few days after saying here I am being super bullish on treasuries, yet I should be more bullish on equities, and still I'll throw it out to you. Hopefully some of you wrote more of that. Yeah, I caught the first part of it, but either way, I think it's run its full circle. Okay, I had to pause the video there and was gone for a little while. I had to take an important, can't remember exactly where I left off, but I'm just looking at this chart and I see just a beautiful setup. It reminds me when the market peaked. You had nice, clean uptrend lines. Even in this year, this is when Alphabet peaked. That was a beautiful, clean uptrend line with negative divergence, a wedge. You broke down, then you back tested below with a minor trend line. To put in a higher high. And this is, one of those examples where divergences don't always play out, but they usually do. And when they get bigger, it just usually leads to bigger drops. So that was the high right now, officially, and still the one I maintain, for the stock market. Remember, QQQ is not the stock market. The S&P 500, and then Nasdaq Composite, the equal weighted index, the small caps and mid caps collectively, or any one of the broad base like VTI, or the Wilshire 5000. So where I'm going is, so we went down, hit that. That's what I was talking about. These purple lines. That's right. Now remember, hit that again. It was time to cover shorts and go long. And I think the bounce has run its course. We've come up. There's a nice uptrend line, just like this one, about similar in scope and duration. And there's a breakdown, and we've been moving lower. So, and we have as I mentioned earlier in the video, the bearish PPO crossover. So that's that. Some looking better than others. There's Amazon again, marginal new high like Nasdaq 100, but still a divergent high, very much so. And again, that shows through on all these guys on the weekly. When you see the big divergences on the daily, you can clearly see it on the weekly. And it's these weekly divergent highs and lows that often, signal big trend changes, big moves. And so that was Amazon, and it took a while. It was divergent high. I was talking about it there. It was divergent high, and then we fell back in the range. So we had a failed breakout, and then this stock fell down, whatever it was down here, and this is where we bought it. We bought that first bounce there, and then we bought this one long, and so that's it. All right, I'm going to wrap up here, but that's the common takeaway. The technical posture today, if anything, and solidly is more bearish than it was before this last test down where we tested those purple key support levels and bounced, because now you have what you don't have back then. You have on just about all, not yet on Apple. We already put in a divergent high, so we don't have to have another one, but we had just put in a divergent high on Microsoft, Alphabet right there on the weekly, Amazon, as I just showed you, and the king of the AI bubble, NVIDIA right there. And again, NVIDIA has room if it wants to push a little higher. Anytime soon, it's still going to be a marginal new and still divergent high. So like I said, all in, not yet. Maybe you don't want to be short without any better sell signals. Maybe you want to be long. And if you do want to be long, then again, look at the same levels that I'm looking at, support levels in which to break and trigger. This would probably align with those purple levels here, kind of all-in moment. There's that. And price support, this little trading range here in the video right there. And then the uptrend line. So that's kind of the all-in moment. And you can also use pullbacks at that level, as we did recently, to go long. Or, if you see breakouts above resistance as well. I'm going to wrap it up here. The video went a little bit longer than I wanted to, but that's it. I just kind of wanted to update everything on the and add to the the crossovers that we're looking at, PPO crossovers on certain things. So we never got it in QQQ today, so something to watch for next week. This has been Randy Finney with Right Side of the Chart. Have a great weekend.